Hello, this is Pat Walker, Mission Winners. I'm doing a training coaching here video, and it's going to be an in-depth video. It's about how to spot a failing breakout and how to recognize it and how to get out of it, how to exit. Bottom line is how to manage it. Now, Bill O'Neill, who's one of my heroes, talks about limited losses at 7 to 8%. We take it a step further. What we have found through 20 plus years of extensive research and doing this, if we are really, really precise in our entries, we dramatically improve our results, A, for making money, but B, for keeping losses much, much smaller. You can say, Patrick, how do you mean that? It's really simple. It's good above the line, price is good above the line, or it'd be bad below. That's simple. And the best ones, and this is from years of extensive research. I don't mean like, oh, just looking at a few charts. Tens of thousands of charts studying. What we find is this: the best ones just go. They take off. They push through that clean and simple spot and they just run. Here's an example here. Here's another one for you. Microsoft, right there. It just goes. You're not tested. NVIDIA, right there. Did you see that? Look at the volume search. It's clean and simple, and I'll do something to help you train your eyes and mind. Clean and simple tops, the highs here and the highs here. It's nothing fancy. We don't need to have stochastics or oscillators, Fibonacci, nothing. We're just looking at clean and simple tops, and we want it to push through that line, and we'd like it to push through on volume. And it does, and it's off to the races. Here's another one for you. It's simple. I'll shrink this a bit so you can see this. Look at the tops. Just connected the tops. Folks, that's just a simple straight line. There's nothing fancy about it. A sixth grader better not use crayons. A second grader could draw that with crayons, but make sure they don't do it on your computer monitor. It's a bad situation. Goes sideways. Look at the volume pickup. It's good above the line and it's bad below. It's that simple. AN, and I'll enlarge this a bit. Right here. It lifts, it pulls back. Now here's a real world example. Look at this. It lifted off on heavy volume and it fell a little bit below the pivot. But was it much below the pivot? Not one bit. So it's acceptable to stay with it. And the next day it gaps up. Keep losses extremely small and you will do much better. And this is something we're really big on. Look at Kutera right there. Look at the base. Just connect the tops. Simple flat line. And it lifts through on a big volume pickup. That's what we like. Indava, right there. And look at the volume pickup. And what I like to do is, a lot of people like to look at charts after the fact. I think it's important to go in and slide the chart back before it broke out to train our eyes and mind on what to look for. And that's what we're really big on, Mission Winners, is not hypothetical stuff, the real world. Because you know what? When it all comes down to it, that's what we're going to be. We're going to be in the arena, in the real world, having to make decisions, analyzing charts, making decisions. Indava, clean and simple flat base, nothing fancy. And it lifts through on a big pickup in volume. Right there. There it goes. And it works. Could show you more, but let's flip this coin a little bit. What do you say? Star. Beautiful. Step. Boom. Boom. Off to the races. And I'll shrink that. Look at the long base. If you focus on those, you will do much, much better. But now let's go further with this. What happens when they don't work out? Well, Cliff lifted off here on heavy volume and it started to fall. This is something you're going to find, and this is the real world. The best stocks just push away. Remember that. They just push away from the pivot price. If they start stalling and pulling back towards that pivot price, it tells you something. It tells you you're wrong. Lifts, runs, right here, very little push, volume starting to pick up to the downside. What did we do? We sold some off. This is the daily chart. Okay, daily price, daily volume. Here's the hourly chart. This is the first hour of the day. Look what it did today, team. It rallies up and it drops down. It gaps up and it reverses down on a pickup in volume. You know what we do? We sold some. This is the hourly chart. Here's the 30-minute chart right here. It gaps up this morning, rallies up, and reverses down on a pickup in volume. We don't like that. When it starts falling, we sell some. It's that simple. I'm going to really reinforce this. Focus on the daily charts, then look at if it's failing or pulling back, look at the hourly chart and look at the 30-minute chart. It will help you make much better decisions. DDS, this is the real world. This is today, 8/2/21. Can you believe it's August? Look at that. The summer's flying. But watch this. There's the tops. Clean and simple tops. We wanted to push through that line. Here is the daily. It did. It broke out. It gaps up a little bit. It runs up. It takes out those tops and reverses down. This is the daily chart. Take it to the hourly. There's the white line. There's the tops. Here it is on the daily. Here it is on the hourly. It lifts off this morning on heavy volume. And through years of studying, this is a fact. You will find the best breakouts push away. They don't run up and then start falling down below the pivot. And they sure don't do it on fairly heavy volume. If that's happening, and again, this is the hourly chart. If that's happening, if it does this and this and this, it's telling you you're wrong. You must sell off at least 1/2 of your shares to protect yourself. 7 or 8%? Are you crazy? Excuse me. No, it's good above the line and it's bad below. Starts losing this line on volume, you sell. This is the hourly. Take it to 30-minute. Here's the first 30-minute bar. Here's the second 30-minute bar. Inside bar. And look at this bar. It gaps up, runs up a bit, and starts falling below that line, and it's dropping. You have to sell some. Don't argue with it. Why? Because a small loss right in here at 189, we'll say 188 to 189, down here at 177, we don't want that. You can say, percentage-wise, that's not much. I don't give a rip about percentage-wise. 10 or 12 points is 10 or 12 points. That's the bottom line. That's what I'm after. We try to ride trends for as long as we can. And when they don't work out, we sell. There's a classic case. This was on the key list last night for buy. Lifts off, reverses down. You buy it, you sell it. And isn't it good you did? To sell it up here at around 188 versus 177. Small losses. Here's STLD. It started to lift off. Then it stalled here a little bit. And then today, it starts to dropping. And this is something you will find. The best stocks will not take out the previous day's lows. If they do, something's wrong. The best breakouts, study them. Study past breakouts. And you'll say, by Jove, Pat is right. Yeah, I've been doing this since 1986. I had to support a family of 6. I had to get this down. All right? I didn't have a choice. I had to. All right? And I'm not complaining. I'm thankful. But here we go. This is the daily chart. Clean breaks, lifts up, falls. Here's the hourly. Look at the first bar today. Check this out. Let's do this. This is the close Friday. We'll say, oh, okay, maybe if it starts to lift off, that would be good. And you're not looking at you should look at the daily always. Here's the hourly. It gaps up, it runs up, and reverses down and closes in the bottom 1/4 of its range on a pickup in volume. That's a sell signal. Something is wrong. They don't do that. Take it down to 30-minute. Here's the first bar this morning. Runs up, and then the next bar takes it right back down. And actually, the price on this bar, look at the low on that bar. It's lower than this consolidation pattern. That's telling you something's wrong. NEO from last year, it's good above the line. It's good above the line. And then it just takes off. Wicks, right there. It just takes off and it goes. You can say, oh, what about this bar here? What about this bar here, right here, Pat, where it fell? Yes, it did. Could you have sold some of the strength? Yes. And here's the beautiful thing. If you bought right, did it fall below your buy price? No, it didn't. right there. Kirkland, right there. And right here. FUTU, right there. It's good above the line, it's bad below. And it just goes. It just goes. Focus on really clean and simple bases. Doesn't need to be a cup and a handle. It pushes through on a volume pickup and you buy. If it's fallen below that line, take a look at the hourly chart and the 30-minute chart. You see volume coming into it and it's losing this pivot. Sell some. That's simple. No high stress. You don't need to. Let it work. And remember this, trends pay. From 50 to almost 200, that's a quadruple. Trends pay. That's what you're after.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.